Apple setting record earnings and, well, pretty decent earnings. I wouldn't say record. It's reporting a towering pile of cash, about $256 billion, $257 billion. With the exception of the top 5 dozen countries in the world, yes, we're talking countries, Apple's cash mountain is now greater than most countries' GDP around the planet. It's larger than the GDP of Ireland. It's larger than the cash pile of the UK and Canada combined. It could pay off the interest on the U.S. federal debt annually. But now this, Apple is being criticized for parking that money, much of it overseas, not paying its fair share here. Here's what CEO Tim Cook told the Washington Post about being called upon by Trump to bring that money back to America. Quote, "We are not going to bring it back until there's a fair tax rate. There's no debate about it. Is that legal to do or not legal to do? It is legal to do. It's the current tax law. It's not a matter of being patriotic or not being patriotic. It doesn't go that the more you pay, the more patriotic you are." That's what Tim Cook has said last year. Joining me now are Lido Isle Advisors managing partner Jason Rotman. We've got, look who's here, Jonas Max Ferris of the MaxFunds.com co-founder and editor. What do you think, Jason? Apple being attacked by a liberal media, not paying its fair share? You know, Tim Cook, Jason, he's railed against Trump administration policies. This is kind of a funny spot for Apple to be in, no?
Well, I think I agree with Tim Cook. I mean, I think any sensible business person would. It's really a numbers game. It's not a patriotism game. I think that Tim Cook has every right to keep the $250 billion outside of the U.S. because if he brings it back, you know, he's going to have to give away a third of it, and he's not going to end up doing that. That's bad for the company. That's bad for shareholders. So. On the other side of the coin, I think I want to own a company with that much cash because I do predict at some point Trump's known as the consummate deal maker. Those two, Tim and Donald, will make a deal. Some of that money will come back, and that'll be good for the company. So I want to own Apple stock at this point. Yeah,
that's an interesting point that you make there, Jason. Basically, Jonas, Apple's Tim Cook on another front. I mean, we know that Apple's Tim Cook, like much of Silicon Valley, Jonas, has criticized Trump. And it's being criticized, too, for exploiting cheap labor. We know that Apple story, right? That Apple uses cheap labor overseas to make its iPhones. I mean, is this a dangerous spot for any company to be in about whether or not it's being patriotic?
Yeah, you're not going to publicly shame a corporation into paying a lot more tax than they legally have to, or that they can figure out how to avoid by putting it in low tax. Small countries with GDPs less than the amount of cash that they've accumulated at this point. But that doesn't mean going to like a 15% or any rate is going to magically bring this money back, because why? If it's not taxed in a big pile abroad and they can borrow money at almost treasury rates here and deduct that, because that's what you're allowed to do in the corporate tax, there's no reason to bring the money back ever, because we don't tax it till it comes back. So there's fundamental flaws with the global corporate taxation that may only be solved by a 0% tax rate that will keep this money from coming home. They can't be fixed just by lowering it. A lot of other countries have lowered their rate lower than ours. And we probably have to match that.
I mean, Ireland did that. That's right. To Jonas's point, Jason, that Ireland made itself a tax haven. And what Jonas is saying, I think this is probably the most important policy issue right now for the Trump administration and for Congress. It is the cheapest form of stimulus to get that corporate cash pile back home. $2.5 trillion bucks estimated. What do you do?
What do you do? Well, besides, you know, I think the guest makes a very fine point that it's not just about lowering the rate to, let's say, 10%, because Apple can borrow at, you know, whatever, 1, 2, 3%. I think that's a great point. At the same time, I would go a step further and say it's not that simple. When making a deal, you know, Donald Trump, Tim Cook, whatever, it's not that simple to say, Tim, you know what, I'm going to lower it to 10, now bring over your $200 billion. Donald Trump has to create a whole incentive structure that, Tim, I'm going to tax you 10%, but if you invest the money here, if you spend the money here, there's going to be double and triple incentives. That's what's going to have to happen.
You know, Jonas, Democrats will say, hey, last time George W. did a tax holiday for money overseas, companies just used it on share buybacks and dividends. They got mad about that, but that's putting money in the economy via dividends. But they said, hey, wait a second, you know, can we trust companies? That's their point, Jonas.
No, the only reason you'd even take advantage of such a holiday is if you thought it was a holiday and it's going to go back to this lousy system that currently incentivizes you to pile money in other small countries. So that's only, you're basically hosing your own tax revenue at that point. This is one of the reasons, actually, even though corporations in America are the most successful in the world, their tax they pay as a percentage of GDP has been in decline for like 35 years. So it's not even working. It's heading to zero. So we might as well figure out a simple system that is a long-term plan and isn't cheats and holidays and and one-off deals. That's not going to fix this problem. We'll be talking about the amount of money they pull up 5 or 10 years from now again.
It's a good point. Jason Rotman, Jonas Max Ferris, good to see you both. Thanks for coming on.